also have Jonathan Schiessl joining us on the show to talk to us about the fundamentals. Jonathan, hi. Good to be speaking with you. Finally, do you think it's the time of a comeback of the large cap names, and 2024 could well be the year that will belong to large caps and not the mid caps and small caps in India?
Yeah, look, I mean, to be honest, the Indian market is, large cap, small cap. I mean, compared to most other markets globally, the Indian markets have performed extremely well. Yes, the mid caps have done extraordinarily well. And obviously, we have seen some catch up more recently of some of the larger cap names. I think, the likelihood is certainly from a foreign investor perspective, continued inflows into India. So, and that will mostly be focused in the large cap space. So I think the large cap space does look well supported going forward. But obviously, they have done very well already.
And what about India as a whole? Because when we started off this year, we weren't expecting much from India. In dollar terms, people were expecting maybe 2 to 5% kind of growth, but we have managed to beat all those expectations. Next year, do you think this could continue with that big elections also lined up for India?
Absolutely. I mean, obviously, next year is going to be a very key one. I think perhaps the mistakes that some investors, including myself, if honest, I thought India had done already exceptionally well vis-a-vis markets like China, and I was expecting a bit more performance from China and some money to sort of come out of India and head back to China. Clearly, that hasn't happened. India's continued to go from strength to strength. So I think 2024 probably will be a good year for India, but valuations are a little bit, a bit on the high side. But I still think flows will remain positive. And the global backdrop, if the dollar continues to, if the dollar comes off a little bit, US interest rates ease back, that should be good for the markets like India and other emerging markets as well. So it should be a reasonably good year, I think. So remain quite positive.
So, Jonathan, just wondering, is it time to now take tactical calls, ease out from small and mid caps, allocate larger chunks to perhaps large caps right now, and especially within large caps, the underperformers?
Lesson, I've been investing in India for over 25 years. And sometimes, like earlier on this year, we took a little bit of money off the table in a couple of Indian stocks, thinking they'd done extremely well. Momentum clearly has been strong, and they've carried on moving higher, and we've probably sold a little bit cheaply with hindsight. I think India, as a whole, is a fantastic compounding market, very good for long-term investors. To trade the market, fine, that's a very good strategy if you're prepared to do that. We are sort of slightly longer-term investors. That's our style. That's what our investors know us for. And we tend to sort of buy and hold. So for us, absolutely, we think the market should be a pretty good market next year, but trading in the short term comes with its own risks. We're longer term investors, so we find them, short term market timing a bit more difficult.
Sure. Let's take a look at Coal India. That suddenly spiked as much as 5%. Not sure what the news flow is. And that's not alone. You also have NLC India perking up. So that too has moved higher. So some of these coal and mining related stocks are doing well. But that brings me to my next question, Jonathan. It's been the year of PSU names, the public sector entities here in India. What's the FI view on it? Because it was one space that was always marked by regulatory uncertainty. But now, given the value on the table and kind of returns, are FIIs looking to bet even on those names?
I think to an extent that's true. For ourselves, we've always been a bit cautious for the reasons you highlight. And obviously, from time to time, we've seen the government releasing stock as well into the market, which provides a bit of an overhang. But yeah, from our perspective, there is the governance issues around a lot of these PSU stocks. Some of them are very good businesses, absolutely, no doubt about that. But we've tended to shy away from PSU stocks for those governance issues and obviously worries over potential share sales. But that said, there's no doubt there will be other foreign investors who will be looking at that part of the market for the valuation attractiveness. But to our mind, there's a reason why a lot of those stocks are a little bit cheaper, and that's obviously the governance side, which there are some other questions that need to be addressed on that.
Right. Kunal, so let's talk about some of these PSUs with you, right? Because time and again on a daily basis, one of your top picks is invariably a PSU, be it a Coal India, NTPC in the past, some of the power names as well, or railways and defense. Still go long into 2024 into this as a theme?
Yeah, I think the momentum has not died down for the stocks, and I think the classical example over here is RSC PFC. These stocks were overbought quite some time back, but then these stocks have moved up from an overbought territory to a very strong territory, and we can expect something very similar happening for many of the PSU names. So I think Coal India has just come out of a major resistance. So in terms of the monthly and the quarterly chart, this is the second quarter on a trot where the stock has shown very good recovery, breaking past about the 240, 260 hurdle, which was a major resistance for Coal India, and now, of course, about the 360 mark. So I think in terms of the time frame the stock has gained, it's hardly been just a couple of quarters for the stock breaking past about those major resistances on a trot. So I believe that this should be at least a multi-year rally for Coal India, and I think the best way to try and capitalize into the trend for these stocks is to use those odd corrections which combine into these stocks. So there will be a point where the stocks on an average may correct by 5%, 3% to 5% band. That's the best time to try and average out holdings or try and accumulate further.
Okay, point taken. So that's about some of these public sector entities. Some of these logistics stocks are also picking up, especially the railway names. So IRFCL, as I was pointing out, Railtel Corporation as well from that entire ancillary, and G Shipping from the shipping world is also perking up. What's your view, Nooresh, on some of these counters?
So out of these names, GE Shipping looks promising for the fact that it has been a slow and steady move and finally has caught momentum. And we are seeing momentum across the board in shipping names. So GE Shipping on dips is still a buy. Shipping Corporation of India similarly is a buy on dips even at current levels. In terms of railway stocks, it's a tough call now to be buying at these levels because the names have gone up 3x over the last 6 to 9 months. In such a period, the risk reward is not great. So one has to have very tight stop losses. For example, now Railtel has given a breakout on a very short-term basis, but one should have a strict stop loss below 295 if one wants to participate.
Right. Okay, that's the call coming in on some of the shipping names. Jonathan, given your view on the PSU pack, where else do you think momentum is there, and you'd like to stay put?
So, we, and I think I've mentioned it a few times in the past, we still very much like the financial space, the banks. Again, for foreign investors, some of them can't trade in the domestic market. They have to trade in the ADR market overseas, and you can buy Indian banks there, private sector banks, which are a great play on the broader Indian story when you've got a limited pool of stocks to be able to choose from. So the banks still look good to us. Yes, they've done reasonably well. IT's done very well as well. But perhaps some of that momentum for next year is being priced in. But I think you're seeing that across many markets. So, I think sticking to the core sectors probably is a pretty good idea. I think a lot of the money that potentially could come into India next year probably will come in via ETFs. So the larger sort of sectors from an index perspective should do fairly well.
Okay, point taken. So that's about some of those public sector entities and the kind of move that we have seen. What else is happening in the market? It is SAIL, which is down 3%. Siemens, which is coming under a bit of pressure. And then Nalco and some of the other metal names are also down and out in the trading session. Having said that, Hindustan Copper continues to scale fresh highs, so 5.5% higher. Voltas has made a bit of a comeback. Delta Corp, which was out of the F&O ban, is also seeing some buying action. But of course, the one space which is outperforming is FMCG as a pack. Kunal, what would be your recommendation when it comes to FMCG? Are there any names that you would want to take a bet on, or just because there are better opportunities available, perhaps just be in those spaces?
I think it's a good time to try and balance out with some low beta stocks or more of the safer names in terms of the beta nature of these stocks. So I think HUL and Marico are the two names which are looking attractive on the charts. In fact, HUL today, if I'm not wrong, has also confirmed a breakout of the 200-day moving average. Marico above 547, 548. The last I had seen, I think has also broken past about the 50-day moving average for itself. So it's a very strong kind of a case building up that the FMCG stocks in the sectors which were huge underperformers, I think they could probably try and see some bit of covering of price action for themselves. But I would probably expect this to be just a moderate kind of a rally. For example, for a high beta sector, we would probably place a higher targets in terms of momentum by a scale of 5 to 10% at least. I think for the FMCG stocks, we can probably put 5% as a near-term target range, as a near-term cap for the stocks.
Right. Okay, that's the take coming in on FMCG, which reminds me of Devyani International, their foray into Thailand, and look at what it's been doing to the stock today. It's been on a tear, 5.5% higher still right now as we speak. Nooresh, I don't know if you've been tracking the charts of Devyani International at all.
So, been tracking it before. Now the stock went sideways after attempting that highs of 210, was a failed breakout. After listing over the last 2 years, many a times it has come to 200, 220 zones and faltered. So out here, that continues to remain a problem. So today is just a one-day take. I would expect sideways move to continue, and the whole sector is going sideways. Majority of the names have not seen much of a price action. So time to have no view on them.
Point taken, but we also spoke with the management of Sapphire Foods from the space to get a sense as to when do we expect a recovery, because Q3 was expected to be a bumper quarter, didn't play out like that. In fact, there has been a decline that we have seen in the SSSG of the company. So going forward, what's the outlook? Listen into what they told us.
I think all of us were living in a bit of hope, saying that post Diwali we should start to see consumer demand picking up. But I think it's not worsened, it has not improved. And perhaps this has been the trend for the last 3 or 4 quarters. We are still hoping that the balance part of the year will go down quite well. The last 3 or 4 quarters on Pizza Hut undoubtedly have been disappointing on the brand. We've got to work on building greater level of consideration, greater level of repeat users. And indeed, that's the plan. But for the moment, I think we will scale on expansion on Pizza Hut. Towards the April-June quarter, I think things should start to see improvement. But really, and I just want to underline this as a last statement, we are not looking at the market and crying about it. I think there is opportunity for a company like Sapphire Foods. With our execution, we'll be well prepared when the market turns. And there's lots of action on both KFC and Pizza Hut.
Okay, on that note, let's thank Jonathan Schiessl. Jonathan, good to have you on the show as always. Apologies for coming to you a little late, but let me also take some closing trading ideas as well. Kunal, what's on your list?
So from the PSU banking lot, PNB is something which looks attractive. The stock has broken past about 90-91 levels today. That's a trade which I would look to go for in the closing segment.
What about you, Nooresh?
So that would be a buy on Voltas, which has been sideways for quite some time. Given a breakout today, good price volume action, crosses a swing high, could go towards the 920, 950 mark in the short term.
Okay, so those are the closing trade recommendations. Slipping into a very short break. When we come back, we track the 30 minutes of the trading session left.